Welcome and welcome back to all of you who are tuning in live on our social media platforms. Thanks so much for joining in. We're going to start taking your queries as we speak, and quite a few have already posted their queries. I'm in conversation, or rather we are in conversation with Kunal and Saurabh, and they're going to take all of your queries over the course of the next 20 minutes or so. I'm going to start with the first YouTube query that's coming in, this one from Suhas Shah. It's this very simple question. What about Cummins India? Let's pull up that chart and see where it's currently trading. Suhas, I would encourage you in the future to indicate what your time horizon is, and that will help us go to the right person and get you the answer that you're seeking. I'm going to go across to you, Kunal, because he's not really mentioned a time frame, and he's speaking about a stock that has done very well for itself. It's a doubler over the last year or so, but it did see quite a bit of correction. Is this a good opportunity to pick it up?
So absolutely, I think it's a good stock. Alex, it's been a tripler, I think, from 300 levels to level of 900, which it tested a week or two back. I think it's been an exemplary performer. And also, I think the stock has a history of going through rallies and more broader consolidations, more of time corrections. So I think in that sense, trying to get into the stock at corrections or at lower levels seems to be a good entry, a good strategy for the stock. The only catch is that probably the major support for Cummins India could be somewhere closer to 750, 770 mark. The stock has made a low today of, I think, approximately 800 levels. So I think it's coming very, very close towards those kind of strong support zone. But I think if you have a buy and dip strategy, and if you are in from a longer term haul, say by at least 1 year to 2 year plus kind of a time horizon, then I think starting at current levels could be a good approach. So you can start at 800, 830 levels where the stock is trading, and look to add on further corrections, specifically at that 750 mark.
Saurabh, coming to you next on this question that we have from Mahesh Vaidyanathan. It's an interesting question. He's looking at Coromandel International for a period of 5 years. The stock has done pretty well for itself over the last year or so, about 46% gains. And, it's looking a little weak in trade today, down about 2.6%. But we're, of course, talking about the long-term prospects of this counter. So is this a good time to consider buying Coromandel International?
I think this stock is consistent. The company is consistently, compounder. If you see, it is a very good company from the Murugappa group. Now, over the years, the company has improved its performance both in terms of revenue, sales in the fertilizer segment, in the expansion in the margins, and they have done the capex activity in the past also. I think for the time period, for such a long time period, for 4 or 5 years, I think one can expect a steady 15-20% compounding kind of return from the investment in this company.
All right, we have a next query coming in from Manohar Himnani. He's saying that he's bought Gujarat Ambuja exports at 133 rupees for a long term of 5 years. He's asking, please suggest what should he do. Saurabh, I'll come to you with this particular on this particular counter. Gujarat Ambuja exports over the last 1 year has seen a solid run up. But how does fundamentally, how does the stock look over the longer term?
I think the company has posted good set of numbers and has seen a good amount of run-up. But since it is a mid-cap, I would suggest if you are having large-cap stocks in the portfolio, then it is okay to invest in the Gujarat Ambuja export. But if you are betting only on single company, then I think consistent compounders should be from the Indian infrastructure play, or maybe from the IT pack, or maybe from the financial pack. I think you should have some kind of large cap in the portfolio if your horizon is that long. So I would recommend to stick with the large name from the IT or from the banking space. That would be my advice.
All right. Let's go to the next one then. We've got a question coming in from Sheikh Aslamuddin, who's asking about JSW Steel for today's intraday. Kunal, coming to you on this one, how does the stock look? Yesterday saw quite a bit of a tumble. What's the view on it today?
So I think from an intraday perspective, maybe the range for the stock seems to have formed. I think 605 and 625, 630 has been the intraday range for last 3 days for JSW Steel, and I think it's been meandering in this 30-point band since last 3 days. So it's consolidating over here. difficult for the stock to pick up a trend for itself, because the market conditions are a bit grim over here. So I think in that sense, possibly the stock may remain in this range 605 to 630 approximately. So if the stock comes back to the, say for example 605 levels, I think that could probably offer some good intraday buying opportunity or better risk reward trade for JSW Steel specifically.
All right, our next query is coming in from Tatpan Janwar. He's saying that he's purchased Tata Power at 113 rupees per share. He wants to know whether he should hold on to this particular counter or sell, and he's a long-term investor. So Saurabh, what's your view coming in on Tata Power? This also particular counter saw a good set of rally, but he is a long-term investor. So what should he do with this particular counter?
I think investors in the Tata Power company for the long term should not be, investors should not afraid after investing in this company. The stock has seen huge re-rating after the company's plan to restructure its balance sheet and reduce dependence on the debt, and the way they are looking forward for the next 4 or 5 years. I think that the only thing is that he has bought at a higher price, but since he is invested for the long term, I think there should not be any worries. Hold on to your investment.
Okay, we've got an interesting question. This one from Adil. He's looking to pick up Kunal, MGL and IGL, and it's quite an interesting couple of stocks that he's picked up, but he's not sure at what point he should consider entering. So are the charts indicating when this opportunity could present itself?
So Alex, I think out of these two stocks, if assuming the question is that to pick up one of them, then I would give more preference, of course, to IGL because of the inherent quality of the trend. So yes, both the stocks have trended quite well from their 5 month, 6 month lows. But then when you look at the quality of trend, IGL has of course fared far more better and has been one of the more resilient stocks in that category. So if you have to pick and choose, I would suggest that you can stick with IGL out of the two. But assuming if you're looking at investing both or in both of the stocks, then I specifically believe that in MGL has multiple supports, almost a 6 month, 5 month support at those 1020, 1050 mark. And it's just about in touching distance of coming into that kind of a support territory. So maybe another couple of percentage points drop on MGL. And I think it could probably, offer some attractive, contrarian buying opportunity. For IGL, on the other hand, I think when I look at the charts, it's not done much, in the last 2 months. I think it's remained more sideways, going into a time correction. In terms of levels, I think 480 could be a better level for entering into IGL.
All right, the next query rather we've got is from Sachin Kumar. He's saying he's been holding on to Ujjivan Financial Services in the last 2 years. What should he do with this counter? Sachin, you've not mentioned the quantum, the amount of shares that you bought it and at what price. But Kunal, how are the charts looking for Ujjivan Financial Services? Our viewer has been holding it for the last 2 years. What should he do? How are the charts looking like for this particular counter?
So what happens is there is one very important point which I think everyone who's wanting to invest into these kind of stocks or sectors is that you have to understand the degree of volatility into these names, how susceptible these stocks are to correction. Now, for example, Ujjivan, when you look at it from the March 2020 recovery, yes, the stock did pretty well. From a low of 125, it went up to almost as much as 300 odd levels. But from 300, look at the vulnerability of the stock. In the last, I think if I'm not wrong, this is the 5th straight month where the stock is going through a correction. Now compare this with many of these other large cap names in the financial services name, like maybe a Bajaj Finance or maybe a Chola Finance, etc. I think these stocks have done reasonably and remarkably well. So my suggestion is that if you are in from a longer term perspective, then I believe making a switch from Ujjivan Finance to these large cap names like maybe a Chola Finance or Bajaj Finance could actually play out to be much more prudent decision rather than staying invested in a very high volatile mid cap stock in that sector.
Fair enough. Interesting call there on Ujjivan. Let's take the next question on a large cap banking name then. Raghunathan's got a question on ICICI Bank. Raghu, you've got a question on two banks, but I will take only one counter per individual. You've bought ICICI Bank at an average price of 534, and you're looking for a long-term view. So I will go across to Saurabh on the fundamentals. Saurabh, how are we looking at? Of course, we're going to wait for the Q4 earnings for these banks to pan out, but what's the view specifically on ICICI Bank?
I think view remains quite optimistic on the ICICI Bank. If you look at the numbers, they have consistently improved. The margin, net interest margins have improved, NPA have declined. The capital adequacy ratio has been already strengthened by the bank. So I expect no worries. The bank is clearly focusing on the retail side. Every bank is focusing on the retail sides, and I expect the corporate growth would also come in the due course with the ongoing recovery in the Indian economy, especially the government thrust on the infrastructure side. So I'm quite confident that the ICICI Bank will give good returns in the next 2-3 years. I think my advice would be to hold.
All right, let's get on board our next viewer query, and this is from Mainik Chakraborty. He wants to know whether it's the right time to make a fresh entry into HCL Tech for the longer term investment. Kunal, I'll come first to you. HCL Tech, we spoke about the large cap IT names yesterday. HCL Tech today is actually down in trade, considering what is happening with TCS and entire IT pack as well. So does it make sense now for the viewer to enter HCL Tech for a longer term?
So, what actually happened last quarter also, Cheryl, that many of these IT stocks, they actually became, buy on, anticipation of the results and then sell, post the results. So, there was this trade phenomena which happened for the IT stocks in the last 2 quarters. I remember, I think specifically even from the September quarter as well, we had seen these, stocks going through a downward drift for at least a 1.5 odd month. So in terms of timing or timing it aptly, these stocks went through at least a 1 month correction of 10-15%, specifically HCL Tech from 1050 levels. In the previous quarter, it corrected and went down to as low as 900 levels as well. So, if that's the trade which is actually playing out for these IT stocks, where, on the anticipation of the news or the results, these stocks move up and post results, you see a correction. And if a similar correction pans out for HCL Tech, then you can probably expect the stock to come back to 900 levels. So I think a much better entry point is closer to that 900 mark, which is also the previous support for the stock price.
All right, we've got the Bajaj twins that are doing reasonably well for themselves, or at least they were just a short while back. They took quite the battering in yesterday's session, but the question is from Rahul Pahade, and he's looking for a long-term view on Bajaj Finance. Saurabh, they have been a little cautious over the last year or so, and they've stated very clearly that they are happy with that caution. Having said that, what is the view on the fundamentals? Would you suggest that you can still enter at this price for the long term?
I think the market has always paid premium because of the kind of the growth that the company has given over a period of in the last 4 or 5 years. But considering the fact that they are going slow and there is a concern that there may be rise in the delinquency rate for the likes of Bajaj Finance, I would say that at the current market price, it is better to stay away from investing, making fresh investment in Bajaj Finance. I would rather recommend to invest in the full-fledged bank, for example, the stock which we have discussed just now, ICICI Bank or maybe Axis Bank for that matter.
All right, there's another query that's come in from Jaideep Chakraborty. He's saying that he's purchased India Glycol at 535 rupees per share. He's a long-term investor and he wants to know whether it makes sense to hold on to this particular counter. Saurabh, India Glycol over the last 1 month has not been great for this particular counter, but how is the long-term prospect looking like of the stock? Does it make sense fundamentally to continue to hold on to India Glycol?
I think it is a mid-cap stock. Largely, I think the liquor story was the key driver for the for the price action that we have seen in the Indian glycol. I think that story is actually getting subside. There would be a problem in the margins and the volumes for the Indian glycol also. So I would say that it is better to take money off the table and invest in some large cap companies.
Let's take a short-term view. We've got Praveena on YouTube asking about Cadilla Health for a swing trade. Kunal, coming to you on this one.
Oh, interesting chart. I think till yesterday or day before, if I'm not wrong, Cadilla did pretty well for itself. Went up to. So what I'm sensing is that the viewer could probably have taken a trade above that 500 mark, where the stock had given a swing breakout on the back of some strong volumes, but then it's come down again below the swing level. So these are swing false breakouts which do happen on a natural course of price action. But then if you're in from a slightly medium term view, then I think such kind of swing breakouts and then a false corrections which happens post that, they actually become good buying opportunities. So I think if if a time horizon of at least 2 months to 3 months is taken over here, then I think closer to 470, 465, I think would actually be a good averaging opportunity for Cadilla, if assuming you've bought it at higher levels, and then wait for those swing targets to or the swing pattern to actually fulfill. I believe possibility of a 525 breakout on Cadilla is a much higher probability for the trade.
Query coming in from Shakti saying he wants to know what are your views on Vodafone Idea. Saurabh, do you want to take this one on Vodafone Idea? How does this particular counter look like?
I think they have lost customer in the last few months. And it is the last month data which revealed that they have added some customer. Besides, the balance sheet is in full red. They have negative net worth. The promoters are not willing to put fresh money. I think there are a hell lot of problems with the Vodafone Idea. So I would recommend it is better if you want to invest in the telecom, they're better to stick with the Bharti Airtel.
All right. I would advise viewers to not ask questions on extremely volatile stocks, also penny stocks. I will not ask my guests to comment on them. I'm going to take a question to Saurabh on Vedanta though. Sandeep Kumar Pandey is looking at, or he's wondering whether to buy this counter or not. In the context, Saurabh, of everything that we've seen in the recent past with regard to this counter, would you suggest a fresh buy?
See, I would suggest because of the the promoter willingness to buy the company, coming out with the offers, they have got approximately failed 3 times, and everything has happened with the Vedanta. I mean, people have lost money because of the offer, and there has been rallies afterwards. So I would this is a kind of metals are actually very cyclical in nature, and besides, because of the promoter continuous intervention with respect to the buying of the company, I think it makes stocks all the more volatile. So if you want to invest in the company, I would suggest metal space. I would suggest better to go with the Steel Authority of India.
All right, that is Saurav's view coming in on the metal space. Next is Vijay Yechuri. He's saying that he's bought 500 shares of IDFC First Bank at 58 rupees per share. He wants to know for how long can he hold on to this particular counter. Kunal, I'll come to you on IDFC First Bank. Last 1 year, spectacular run coming in for IDFC First Bank. Last 1 month, we've seen the stock actually tumble a bit. How are the charts looking like? Does it make sense to... For how long actually does it make sense to hold on to this counter?
Well, I would reply that the longer you hold, I think the longer is the stronger the gains you can get into this stock. It's an emerging name as such from the private sector banking stocks. We've seen a remarkable recovery in the last 1 year, and something which has which has taken the market by a bit of a positive surprise as well. The rally from 30 odd levels, 35 odd levels to a jump till almost 60 levels for the stock in just a matter of couple of months, and then a cool off, which is a natural course of cool off which happens into stocks, which gets ready and prepared for a much longer term upside. I think from a 12-month to 18-month perspective, I would place a target, closer to 68 to 75 kind of a target range for IDFC First Bank. But as I said, that possibility, if the structure evolves to be a much more stronger structure for the stock, then the longer you hold, I think the stronger could be the gains for the stock.
Very quickly, and this is now coming from a view, I don't know the name of, Kunal, coming back to you, what's the view on the Bank Nifty in the current series?
Well, I would believe that the banking index could probably drift lower. There has been a huge amount of call writing which has happened, and call writers are the ones which actually, hold a lot of prominence, or writers, option writers hold a lot of prominence. So I think for the current series, I would expect banking index to remain in a range. Possibility that 32,000 could act as a resistance, and a stiff resistance at that could be, the way to look at on Bank Nifty. And on the downside, I think a possibility of even a 29,500, 29,800 could be the lower end range for Bank Nifty.
All right, Nino, Prajwal, Deva, all of you who've tuned in and who've asked your questions, and unfortunately we couldn't take them. We'll try and take them when we come back on Thursday. It's been a pleasure speaking to all of you. I'd like to thank both the experts who've joined in today, Kunal as well as Saurabh, for taking the time and for being such good sports and for answering the questions that you did answer. We're going into a short break on this program. We'll come back with a lot more.